Anthony, thank you so much for having us here at SkyBridge 15th anniversary.
We're here in the home office of SkyBridge. It's a lot of fun. Thank you, Julie, for being here.
Thank you so much. Well, I want to get your reaction to what we were just listening to, President Trump's comments yesterday on Sean Hannity's program, downplaying the coronavirus. What is your reaction to the president's response?
Well, listen, I want to be as fair as possible to the president because we are in a crisis. So you got to be very careful in a crisis not to overreact, but you also have to be careful in a crisis not to underreact. And so what you're hearing from him on Sean Hannity's show is a woeful underreaction. It's not saying that some of the elements of what he's saying is true. That's something the president does a good job of. He always sticks 3 or 4 fragments of truth into something he's saying that's quite distorting. And so for me, I think the virus is serious, particularly for people that are immunosuppressed and for older people. It's spreading. It's obviously going to be a pandemic. We have to take precautions that are measured and sensible, but we can't under-exaggerate what's going on either. And so I think that's a very dangerous position to be in. This could be President Trump's Hurricane Katrina, where his response and the response from the government is not measured to what is actually going on. And that sort of suppression nonsense doesn't work with the American people, particularly when you have places like Yahoo Finance where they can get real accurate, honest information.
Well, let's talk about the markets. We're seeing another sell-off today. What do you make of the reaction in the markets? How are you thinking about that here at SkyBridge?
Well, I've been on your air a lot. I said last week that we're in the most defensive position that we've been in 31 years. Today is the 15th anniversary of SkyBridge's founding in 2005. But over 31 years that I've been running money, less my 11-day fiasco in Washington, I'm looking at the markets. I don't like what I see. We're in late cycle economic expansion, which is fading. Production numbers are down. We've decided from the government, we can debate it, but we decided to put on heavy deficit spending late cycle. We've lowered rates now a couple of times, a big missile rate of down 50 2 days ago. You know, you don't have a lot of room there if we go into a recession. Now, the Fed obviously could re-expand its balance sheet again, but I do believe that the Fed accidentally is creating the rise of populism and nationalism. In fact, I would say the global central banking system in their coordination has created things like Nigel Farage, Bernie Sanders, and Donald Trump, because the easy move is to lower rates, create lots of liquidity, let assets levitate upwards. But in the meantime, middle-class workers, middle-class families, lower middle-class families have no assets, so they can't catch up with the very wealthy. Right. And that's where the anger is being expressed in the world right now.
Hurting the saving class.
So we're nervous about the markets. It's easy to see another 15% correction here. That's not to say that it's going to happen because they're hitting the markets with everything. I mean, a 50 basis point rate cut and so forth. But what I really don't like is the economic slowdown. People are traveling less. Ports are not taking in as much shipments. There's a lot of different things that are going on right now that are going to cause profits to stall for the S&P 500, which is why I think there's more to go on the downside.
A couple things I want to unpack there. Going back to the rate cut, do you think that Fed Chair Jay Powell felt pressure from President Trump to act?
So the obvious answer is, of course, he felt pressure, but knowing him and knowing the people on that committee, I don't think they act with the president's tweets in mind. I think at the end of the day, for them, it's about their legacy and it's about them being independent and doing the right thing for the economy and the stability of the currency. So I'm sure that sort of jawboning jars them a little bit, but I think they're clear-eyed and very disciplined in acting in the self-interest of the economy and the stability of the currency, irrespective of what the president's tweeting.
Well, it's interesting, just looking at the action this week. On Wednesday, on the heels of Super Tuesday, you did see a little bit of a bounce back. I want to know if you think that is attributed to Joe Biden, and if you think that Joe Biden would be actually more friendly to the markets and the economy than President Trump.
Well, I can only go by my assessment and sort of like a consensus of the group of people that I talk to on Wall Street. Joe Biden would be viewed as somebody similar to Barack Obama. The negative of Joe Biden would be a resurgence of excess regulation. That is a negative. The positives, though, are stability. The positives are ending the nonsense coming out of the presidency. Unfortunately, Mr. Trump has a very, very low self-esteem, and so he's in a position where he needs constant aggravating attention to himself, and I think people are getting fatigued nationally about that. And so Joe Biden certainly ends that, and people can get more focused on business and less wired into nonsense that's irrational that's coming out of the White House.
Well, Anthony, Julie Hyman actually has a question for you, so I'm going to bring her in. Julie?
Hey, Anthony, good to talk to you. Congratulations on your 15-year anniversary there. I want to bring you back to coronavirus and its implications for the economy and therefore the election. Perhaps it's not politically correct to talk about, but incumbents tend to do worse if there's a recession, right? So what are then the implications for President Trump and his chances of winning re-election if this outbreak persists? And what does that do for Joe Biden or Bernie Sanders?
Okay, so again, just being clinically objective, a recession will certainly hurt the president. He sort of has a three-legged stool. He's run on border security, decreased regulation, and economic growth, and he's run on tariffs effectively and fighting it out with the Chinese. If you go into a recession, people will step back and say, okay, the Trump strategy of late cycle deficit spending, bellicosity of rhetoric, disruption of the hard and soft power of the United States is not working for the United States. If he loses the election, people will go back to last week's press conference, and that was actually a historic moment. I would argue that was probably the worst press conference in modern presidential history, because he's out there telling gigantic lies about something that is scientific and something that is health related. And so, people don't like that. And so if you're a nonpartisan investor, I happen to be a Republican, but I'm a nonpartisan, objective investor. When you're listening to the President of the United States tell lies like that, you're moving to cash, you're getting yourself into a defensive position. And so that took about $1 trillion out of the market, that press conference. And so right now, crisis getting worse. Particularly after Sean Hannity's interview with President Trump last night, market participants do not believe that they'll get the straight story from the White House or from President Trump. And so that's going to create more volatility, it's going to create more uncertainty, and it's going to cause voters around the country to say, okay, wait a minute, this sort of disruptive instability is not something that we need right now, where there's a international health scare. And so I think the market resurged yesterday because if Joe Biden does get the nomination, whatever Joe Biden's frailties are or weaknesses, the market looks at that and says, okay, maybe the American people will do better with more stability in Washington than the sort of nonsense that we've been experiencing, which is accelerating nonsense, by the way, over the last 18 months.
Anthony, I want to turn back to SkyBridge. You run $11 billion in AUM. You invest in a lot of hedge funds. You have clients who go through you all to get access to hedge funds. So this is a two-part question. What are you hearing from the hedge fund managers, the folks on Wall Street? What are their top concerns? And then what are you hearing from clients? What are their top concerns?
Well, I think hedge fund managers in general over the last 11 years have been more or less a drought born from monetary policy. And so you've got monetary policy jammed down to zero for 11 plus years. That levitates the markets. And so it makes it very difficult for the typical hedge fund manager to operate because they want to be short some things to reduce their volatility. But if everything's going up, it reduces their overall return. So in hindsight, over 11 years, a lot of people were better served in a low cost ETF that's tied to the market. But I think what's happening now is hedge fund managers, I think, we're going to come back into vogue because as the Fed exhausts its monetary policy and as the general public and politicians globally recognize, wait a minute, we have to solve for things like nationalism, we have to solve for things like populism, we have to solve for the low interest rates that our savers around the world that are getting and are very frustrated by. I do think hedge fund managers are going to come back into vogue. So that's probably too long-winded of an answer. But here's what I would say. You're in a late cycle. The United States is not going to cheat economic history. This is not Australia where we can go 28, 29 years of economic expansion, just a totally different cyclical environment. And we're not going to be able to cheat history forever. You will have a roll in corporate profits and you will have a recession. The question is when. And when that happens, that will bode well for hedge fund managers because they have the versatility and they have the product suite that they can deploy for their clients that's very different from just toggling long stocks, long bonds, or cash.
Anthony Scaramucci, founder and managing partner of SkyBridge Capital. Thank you so much. We're going to have more with you today.
I was 6'4" when we started, and now I'm like Mike Bloomberg's height without Mike Bloomberg's money. But we're hoping to make it another 15 years. We'll
have more with you today from the 15th anniversary. Julie, Adam, back to you all.
I think Anthony's okay.
We're here with Anthony Scaramucci at SkyBridge's 15th anniversry.
And we're live.
And we are live, Anthony. Another crazy day in the markets. What do you make of what's going on right now?
Well, when I came in this morning, we had an earlier conversation, but listen, the president's press conference last week, that was $1 trillion. The phone call last night to Fox News, easily $1 trillion ripped out of the market. And so what I would recommend to the White House, get the president off the phone, get him off Twitter, get him out of the press room, and get experts and scientists out there to talk about what is going on and just give the American people the truth. Mm-hmm. And if you do that, the markets will calm down and the volatility will tighten up again in the markets. The markets do not like uncertainty and unknowables. And when the president's out there stretching stories and telling his 17th or 18,000th lie, the market's reacting wildly because this is about science and people's lives and health. It's not about saying that the square footage of the condominium at Trump Tower is 10,000 square feet when it's only 9,500. You see what I mean? So let's cut it out now. This is a very serious crisis. I mentioned this morning that this could be the president's Hurricane Katrina. It could be something worse than that if they don't get a crisis response team in there to talk to him honestly about the mistakes that he's making.
Yeah, you brought that up, the Hurricane Katrina. Walk us through that idea there, why you think this could be his...
Well, in 2005, the hurricane was a colossal, epic disaster for New Orleans all the way up into Houston, but the president's team didn't react well to it. And there's a very famous picture of President Bush peering outside the window of Air Force One, looking at the disaster zone. He didn't get there fast enough. He didn't respond fast enough with FEMA. And it really cost him a lot of points in his popularity. Now, it was in his second term. The president's going into re-election, and he's got a lot of things up against him. He's got the gender gap. He's got a fervor like I've never seen before on the Democratic side. You saw the turnout was historic on Super Tuesday. And so if he wants to calm things down and reset things, he's got to get a good crisis management team involved.
Okay, you just brought up Super Tuesday. You said recently on CNN International that you're a lifelong Republican, but you are going to be supporting Joe Biden.
I think Joe will be the nominee at this point. But yes, I'm a Republican. I'm not a Trumpist. What I was trying to make a point of is the president's actually not a Republican. He's excessive deficit spender. He's broken almost every Reagan-like policy. He doesn't have the decorum of a Republican leader. Just think about Ronald Reagan's 11th commandment, thou shalt not say anything negative about a fellow Republican. There's so many things about President Trump that don't make him a Republican. Now, he has moved the Republican Party into the Trumpist Party. He's got guys like Kevin McCarthy and Mitch McConnell that have disavowed the Constitution and disavowed the Republican Party to be Trumpist, and I understand that, but it's not going to be me. I'm more in the Mitt Romney camp and the Jeb Bush camp, where you have to tell the American people honestly what's going on. So somebody like Joe Biden would give the Republican Party, if he won the presidency, would give the Republican Party an opportunity to reset itself and recognize the mistakes that they're making under President Trump. And then that party could have a chance to grow again demographically, and that party could have a chance to renew itself, which it's going to need to do if it wants to be competitive over the next generation.
Right. Well, I want to get you to respond to this because Jeffrey Gundlach of Double Line Capital was on CNBC today, and he made a case that Joe Biden is completely unelectable. Those were his words. What would you say to him? What would your response be to that?
So the first thing I would say is in April of 2016 on Wall Street Week, which I was currently hosting, Jeff Gundlach said April of 2016, Donald Trump was going to be elected president. Right. He was going to get the nomination, and he was going to get elected president. He also said he would wildly deficit spend, and that would create a tremendous amount of volatility in the economy and in the market. So, Jeff, you got that 100% right. He may, in fact, be right about this. I don't know. Okay, I've obviously been wrong about a lot of the things in politics in my life. But here's the thing I would say that's different right now. It's a relative evil game. And the president is so woefully mishandling this crisis. And one of the big legs of the president's stool is the markets and the economy. He's getting the help from the Fed, but he's hurting himself every night when he goes on television, that he could turn himself into a situation where he is way less electable than Joe Biden. And so maybe Jeff Gundlach will be right. I don't know. But I'm telling you right now, if Barack Obama and Michelle Obama come into the game here and they start rebuilding the Obama coalition, and you get guys like me, which I'm willing to do, going into the white ethnic areas of Wisconsin, Pennsylvania, and Michigan, and explaining the systemic danger of Donald Trump, it's going to be a very tight election, and some of us may be able to convince people that Donald Trump is a threat to their democracy and a threat to the checks and balances system of America that has made us all safe from autocracy and tyranny. And so we'll have to see what happens. Jeff may be right, but he also may be miscalculating the passion that people have for defeating the president.
Just going back to the coronavirus and what we were talking about earlier, what I'm sensing from this conversation with you is you're talking about uncertainty. Are you worried as a CEO, someone who's running a business? What are the things that are top of mind for you right now, and what needs to happen for you to get more clarity and certainty as an investor?
So I am worried, but the good news for me, for whatever reason, in periods of crisis, I usually have an ability to be very calm and very cool, like during the 2008 crisis. But it's reminiscent of what John Maynard Keynes said about the market. He said that he was a beauty pageant contest judge. And it wasn't for him to judge beauty, but it was for him to assess what the other judges thought was beautiful. And that's how you make money in the stock market, according to John Maynard Keynes. But that's also how you have to deal with a crisis. And so, again, as I said earlier, you don't want to underreact or you don't want to overreact because, both of those things could be potentially dangerous. But I do think this is a crisis primarily because people are changing their behavior that's having a vicious cyclic effect into the market. So you get a vicious cycle. If JP Morgan says don't fly and Deloitte says don't fly, and it touches off dominoes where other major corporations don't fly, and then you start canceling a lot of events or people start canceling conferences. You have a 500,000 barrels of oil, according to the Wall Street Journal, that didn't get shipped by Saudi Arabia to China. This sort of vicious cycle slows down the economy, affects behavior, and you could turn something minor into something major. What the president is making a very big mistake doing is trying to coat it over, trying to pretend it's minor, calling it a flu, saying that people get symptoms and they don't need to go to the doctor. All of that stuff that he's saying, okay, it doesn't sound consistent with the experts and what the experts are saying. And so I think that's causing some of the hysteria.
Well, Anthony Scaramucci, founder and managing partner of SkyBridge Capital, thank you so much.
And you met all my partners.
I met all your partners. Thank you so much for having us here on the 15th anniversary of SkyBridge.
It's great for you guys to be here. You destroyed my office, which is totally fine because I'm never in it anyway.
Well, thank you so much for letting us
you come back,
use our office. Jen, Miles, back to you all.
We are not on the hook for any destruction that Julia LaRoche did, but I can't imagine it was
just
anything.
Some of the finest sports memorabilia in the world. It's fine.
She'll put it all back together, don't worry. Anthony Scaramucci and Yahoo Finance is Julia LaRoche at SkyBridge.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.